This video is all about Fed December FOMC minute PDF. So FOMC speech and minute PDF, two different things. Beginner ignore this document most of the time, but if you read carefully, very important. And for beginner, I have separate channel for FOMC meeting, everything related to FOMC meeting. So watch this video to learn how FOMC meeting work and join this Telegram channel to get real-time update on FOMC meeting. I will not read like school, top to bottom, page by page. I will read it in reverse order. I think it is best and you will understand better if you read in reverse order. So last paragraph, voting against this action. So this is new FOMC member, new idea, new tone. So she was against this monetary policy decision and she explained why in light of uneven progress in return to inflation to 2%. So previously inflation was falling almost vertical line, but after making low now it is flying. And we have so many indicators to confirm inflation. PPI is big one. Last month came and big action. Now this week again will come, but PPI after making bottom it is flying. And another important thing, clearly she is saying not good progress on inflation, so no rate cut. And state of fine condition. There are many charts, one from Goldman Sachs Bank, one from Bloomberg. But if you see reading, then when Fed cut interest rate 0% and they were doing QE in March 2020, fine condition index are giving same result. So first one talk about rate pause, second one fine condition index, they are in bad position, and third one neutral rate. So they are cutting interest rate are going down, but there will be time when they will hit neutral rate, which market think right now is 3.75%. This is same like when they were hiking interest rate from 0% to 5%, they stopped at 250. That this is neutral rate and we should stop and watch carefully where economy is going. So same thing is happening now. They are cutting rate. We don't know what is bottom. Obviously not going back to 0% again. Neutral rate this time can be 375. When cut back to 375, then they will say same language like 2022. We are at neutral rate. Stop rate cut and watch where economy is going. And you can see after rate cut that target range yield are flying more than Fed official interest rate. NAP number on recent Friday, 30-year bond yield that was flying at 5%. So when yield fly more than Fed interest rate, that's mean Fed rate pause totally priced in. And after NAP number, not one but many banks are talking about rate hike. So we are reading in reverse order, be careful. So there was 25 basis point cut. One member voted against that decision. This is happening since their first cut. And this member who voted against the action, there is a new member. So they are cutting, but bond yield is doing rate hike. So they are saying repeatedly monetary policy were not on preset course. But if you see before election they did 50, after election they are doing 25, before election they were dovish, after election they are hawkish, before election they were ignoring inflation, but after election when you will read this minute PDF you will see there are big change in their tone. They are now seeing inflation risk. So there is a big change in their tone compared to before and after election. Why they are saying not preset course. So everything was pre-planned to change their tone after election. So their two goal, job market which they say NFP, inflation which they say CPI. So both are unbalanced right now, and they have said many times in this PDF increased upside risk to outlook of inflation. This is a big change, and after election now they are seeing upside risk to inflation, because all the time in 2024 in every FOMC meeting they were ignoring upside risk to inflation, but now high rate and they are seeing upside risk to inflation. In simple term, less rate cut immediately after election. That's why they are saying need for a careful approach to monetary policy decision over coming quarters. So they are saying total 100 basis point of cut this year 2024 before election. Now question is how much they will cut after election 2025. But right now market is pricing for pause and they are talking about rate hike. FOMC members are seeing upside risk to inflation. But in March 2025 again we will be talking about rate cut. Because right now after that NFP all bank they are saying no rate cut before March. That's mean long rate pause until March FOMC meeting this year. You just saw one member voted against the action, but they are saying vast majority of participants view it as appropriate to cut 25. And this is the answer to all traders who were asking why gold going down or rate cut. Collapse started on PPI news and down until official news. Because majority of FOMC member cutting interest rate, and that is wrong, that is increasing inflation. So their two goal, CPI upside risk to inflation, second NFP, you can read. Some saw risk to labor market as tilted to downside. That is a big shocking change. So they are saying NFP downside risk, CPI upside risk. That means NFP can decrease, inflation CPI can increase. That is a big change and big risk. You can read larger than anticipated easing in final condition. So most important final condition index chart, especially Goldman Sachs. Based on that chart, final condition easing, they are giving same result which they achieved by 0% interest rate and QE. So they have to do something, and after that NFP number, one thing is clear, economy is overheating. That means there is small economic boom. Gulsvi gave a speech, ignored, but if you see everything trading near all-time high, SP 500, gold, Bitcoin and final condition index ultra loose, all of those things confirm there is an economic boom, or in Fed language, overheating economy. You can read again, they are saying almost all participants judge upside risk to inflation outlook has increased. Not one, but many members are saying upside risk to inflation. Reason they are giving, stronger than expected reading on inflation. This is December FOMC meeting and more inflation number will come again this week, like PPI and CPI. And NFP part, effect of potential change in trade and immigration. They said again last week after NFP, conditions are unlikely to be source of inflation pressure in near future. So they are saying NFP is not creating inflation. When there is a job in economy, unemployment rate is decreasing, people have job, they have money and they are buying things, there must be inflation. So FOMC members are saying this line since March 2024, restrictive monetary policy, which exposed by Bitcoin price. If monetary policy is restrictive, then why Bitcoin is trading near all-time high? Biggest part was inflation expectation. So gold was first to break out when they forecasted rate cut in December 2023. Then Bitcoin slowly everything flying. Then yield were last. They are also flying. What funny thing last week? Now inflation expectation are rising. That is the last part and red alert. So gold was very fast compared to inflation expectation indicator. They always panic on their indicator, not gold. So they are saying change in immigration policy and change in trade policy, that could be source of more inflation. It is coming, and we have to see what Trump do after he got all the power and returned to White House. If you see this thing as a trend, what FOMC members are saying, inflation had eased from its peak in 2022. If you see as before and after election, CPI made top, it was falling and they were doing rate cut. But now after election, inflation made bottom, now it is flying. They must be doing hike. Old trend was top and falling inflation. New trend is bottom and rising inflation. So officially they are saying in this minute PDF, overall a pace of disinflation has slowed over 2024. That falling trend of inflation, that speed is decreasing. They are saying effect of trade policy change. We have to see new policy of Trump and market reaction and effect on economy. You can read again potential change to trade, immigration, fiscal, regulatory policy and their potential effect on economy. But by March 2025, I think we will have more clarity about trade policy, immigration, fiscal and regulatory policy. Since their first rate cut, dollar index is rising, it is going in vertical line, but FOMC member explaining why this is happening. Because a market is doing rate hike for Fed, but other central bank are doing rate cut. So because of that difference, market pricing, dollar by default is increasing against other currency. So they are explaining all of them are cutting interest rate except one, Brazil. They hike 100 basis point. Why? Inflation pressure. So if Fed does not stop, but their tone is changing in big way after election, PPI is already rising. It will not turn to downside anytime soon. If PPI keep rising, then future is first Fed will pause, and same like Brazil, because of inflation pressure, Fed may be forced to rate hike. So this is their December FOMC meeting. Long term inflation compensation were little change. They're talking about China because opposite is happening. China yield are falling because their inflation is falling. USA yield are flying because their inflation is flying. So both country, two big player, both inflation going in totally different direction. That's why their yield are going in different direction. You can see FOMC is saying expecting 75 basis point of cut for full year 2025. But all rate cut are totally priced out and market is pricing for big rate pause, and some banks are talking about rate hike. You can see this is line from December FOMC meeting. Few sign of concern about persistent inflation pressure. But after December FOMC meeting, that fear rising every week. And after PPI and CPI this week, that fear will rise again. You can see now FOMC members are saying since mid-September, that means their first rate cut. Treasury yield rising notably. Still rising, still flying. After NFP, there was big reaction. If you see 10 year, they test high of 2024. If you see 30 year, that hit shocking 5%. So if we see yield chart, then there is a big fight between Fed and market. So if you see this FOMC minute PDF, big change is they are cutting rate, but market doing hike. Total opposite and fight between central bank and market. They are seeing upside risk to inflation. They are seeing downside risk to labor market.